This is Avijit Chatterjee recording a weekly session for Chartsarefun. This is for the week of July 6th, recording this in the evening of July 12th. Our Chartsarefun service has a blog site. It's in substack.com, chartsarefun.substack.com. We publish daily blogs. And then our YouTube site, which is a channel at Chartsarefun. We do believe there are tremendous fun insights in these charts. If you just subscribe to this channel, you'll get these videos. We usually do weekly videos. We do not share investment advice because we're not registered investment advisors, but please do use these insights to guide your investment decisions, but don't treat these as investment advice. Today we're going to go talk about something that we're following as an indicator, as a technical indicator of what could happen in the markets ahead. We know that we're getting ready for earnings. Earnings is going to take off in full swing starting this week with the financials, and then following week with the big technology companies. This particular chart is that of the VIX of the Nasdaq-100, which is called VXN. What we see here is a horizontal level of key resistance between 33 and 34 that it has tested multiple times and kind of printed higher lows. So right at December, it was a 1709. Then it tested 20.97, 22.25. We're about to go test a higher low. This is a key point. We have to see if this pattern of higher lows succeeds. We do not print a lower low, and from here we have a rebound. This in technical patterns is called an ascending triangle with a kind of a shallow slope on the ascending part of the higher lows. But this ascending triangle, if we do get a breakout from a 17 to a 33.8, we're talking about 16.73 or so as the level of the depth of this triangle from where it breaks out. Add a 16 to a 33.82, 16.73 or so, we can measure something in 50.55 or something in that space. So above a 50 volatility spike is what can be expected if this technical pattern of an ascending triangle resolves. This is what we are watching. So today's video is looking at technical indicators, looking at signs of what could happen to the markets with the key earnings season ahead of us. So this is the volatility of the Nasdaq, VXN. If the ascending triangle breakout happens, then in the following days, weeks, we could see a spike in volatility, and that could result in maybe a sharp correction in the Nasdaq 100 and maybe the overall markets. Another key indicator to look at is the Nasdaq McClellan Oscillator. This is kind of an indicator of the market breadth. This we can see the 50-day moving average, this is also a daily chart in blue, is poised or already has had a bearish cross of the 200 period moving average. The last time it had that bearish cross was in that late February into early March, from where we know that we got that last pullback in March from the Iran crisis. Also, what we see here in technical patterns is a pattern of lower highs and higher lows, which is called a pennant pattern. And we just broke down from that pennant pattern last week. So this bearish resolution where we start getting lower oscillator values gives us a potential chance that from positive, this rotates between positive and negative, we could start getting a pullback in the days and weeks ahead. So this is something for us also to be looking at, that if the McClellan Oscillator from here, already with the bearish cross of the moving averages, starts printing lower lows, we already see a pattern of lower highs, but the fact that it broke down from the pennant, printed a lower low at minus 18.62 from the minus 10.63 that it had late June, and then starts printing lower lows towards that minus 60 or minus 50 level that we saw in the March or November timeframe, means we could start seeing a pullback in Nasdaq. A key indicator of what the market is now watching is oil prices, and the oil price ETF is called United States Oil Fund USO, and this hourly chart is showing a beautiful cup and handle. 115.33 was that left brim. It came to 102.42, came back to 115. That's the cup, and then a shallow pullback from a handle that came on lower volume. If you notice the breakout towards the right part of the brim of the cup, increasing volume and then decreasing volume as the handle formed. If this cup and handle results in the oil prices shooting higher, we can expect USO to climb from 102.42 to 115. So that's roughly 12.58. At 12.58 to 115, 127.58 is where we think this should come up and close this gap that we had from June like 12th or so. So that's a possibility. If oil prices climb, with that, market could start getting inflationary fears. We know that late July, we have FOMC's next meeting. We've already got some indications of perhaps being price sensitive. That's what the FOMC is going to be looking at more than the employment. They're going to be looking at price. Any concerns of inflation, any concern of high oil prices could cause them to perhaps think about tightening, think about maybe raising rates, which the market isn't going to like. From the perspective of the sector that directly correlates to oil prices is the spider energy sector, XLE. And let's look at that XLE weekly chart. This is a beautiful pennant that from there it broke down. So this breakdown in some ways was the market thinking that oil prices now are back towards 70 a barrel or lower. And hence that's what a pennant breakdown. A pennant when it forms can either break out or break down. And we see two pennants here. The pennant that we showed in the Nasdaq McClellan Oscillator, a breakdown. We see another pennant here. It could have broken higher as well, but turned out in this particular case it broke down. That's what a breakdown looks like. So potentially, however, if oil prices will have that cup and handle breakout higher with USO moving towards 127.5, XLE likely starts having another climb. It may not be able to take out the 63. That could have already been a very parabolic vertical climb, but at least this gap close and maybe testing back up to the 60 level or so could be possible in XLE is what we got to watch. This particular is a weekly chart. Last week in particular, we saw that XLE had a bullish rebound. MACD is now beginning to curve higher, and we see RSI tested a key level at 50 and started turning higher. So this is what we're going to watch, the oil prices and XLE, to see if this upward climb negatively correlates to what happens in QQQ. So QQQ, which is the Nasdaq 100, this is the hourly chart, shows us this kind of an interesting pattern from mid-June peak at 745.45, a pattern of lower highs, 745, 737, and the most recent highs at 726. We can see 726 is also the high from July 6th. That's now acting as resistance. We got to see if this turns out to be a right shoulder of an inverse headed shoulder. So 726 pull back to a 707 and then a breakout higher. That could even mean 700 to 726. If that's a neckline and inverse head and shoulder breakout, that could get us to new highs at 752. That could not be ruled out. But that said, we can see a pattern of lower highs in MACD, lower highs in RSI. Overall, this potentially is possible that we could perhaps from the weekly chart, which shows us a pennant shape as well, like that we got in XLE a few weeks back, the breakdown from a pennant shape to the downside, this is potentially what we are looking at. If it turns out that we get a pennant shape breakdown, a 685 to a 747, you're talking about $62. Subtract 62 from 685, you get a level at 623, which is right below that 626, which is the 50-week moving average, which it could come back like in the last time. Came back in the March timeframe, tested below it, and from the rebounded. So a potential test of the 50-week moving average can be ruled out if we have a bearish resolution. We can see here lower highs in RSI. We can see MACD histogram about to have a bearish cross. So the signals are there. It's a question of if this breakdown will happen to the downside. In that case, a test of that 50-week moving average can be ruled out. A key leading indicator of QQQ is the semiconductor stocks. And look at what the semiconductor stocks hourly chart is telling us. This peaked at also late June, around June 22nd at 655. From there, a pattern of lower highs, 644 in like late June, June 30th. Recently, we had a test of that. We couldn't take out 600, came close to 600, 595, and then from there it is pulled back. But if you look at this is the iShares Semiconductor ETF SOXX, and you look at its weekly chart, this is also a pennant, a pattern of lower highs and higher lows. That triangle from there, if a breakout or a breakdown comes, is what we got to watch. Look at what the MACD is telling us. MACD histogram is already begun to decline. The MACD histogram seems to be poised to go dip below the zero line. That's bearish. The RSI we can see is now trying to take eke around. Just it had gone below 70, it's at 68. If it continues its decline, like what we got in the from the March time frame, where we got the decline, RSI decline, MACD went below the zero center line, and then that pullback came. This time that pullback could even be sharper because of the vertical nature of the climb. If we break down below from what we saw this week, we can see that it ended with kind of a doji reversal pattern, a long tail, but it ended where it closed. So it kind of opened at 583 and it closed near 581. So very close to a doji, kind of with open and the close at the same level, leaving a long wick at the bottom. However, if this is not a bullish reversal, we could get a bullish breakout. In that case, semiconductors get another momentum higher. But if it's a breakdown, we wouldn't be surprised to see this go back towards the 450 or lower levels from this pennant shape breakdown. So with that, we are definitely watching for volatility. This VXN, which is the Nasdaq volatility, could have a breakout above 34, and that could take it to 50. That kind of a volatility climb followed with the Nasdaq Oscillator, McClellan Oscillator breaking down with this bearish cross towards a minus 50 or 60 like we saw in November or in March timeframe, could mean lower levels of the market. Oil prices, if USO, which is the ETF for oil prices, has a cup and handle breakout, a higher oil price will raise concerns of inflation, will raise concerns of tightening of Fed policies or maybe interest rate hikes, will not be taken well by the market. This USO climb will definitely help the XLE. We already see a bullish reversal last week. This could continue to get some climb in XLE, the energy ETF. QQQ in particular, the weekly chart, that pennant, if it breaks down from a 685 to 747, is $62. Subtract from here, 685 gives us 623 is the target if this pennant breakdown happens. And for SOX, we're talking about a pennant breakdown that would definitely take it below 500 towards, low 400s or so if this big pennant breaks down. Good luck investing. We'll see what happens with the financial earnings this week, and then the core technology earnings will come the following week. And just be safe out there, be careful with investments, and we'll talk to you next week. Thank you for listening.
We are not registered investment advisors and encourage our users to consult with their financial advisors before making investment and trading decisions. Nothing contained in our content constitutes a solicitation, recommendation, endorsement, or offer by us at Chartsarefun or any third-party service provider to buy or sell any securities or other financial instruments in this or in any other jurisdiction in which such solicitation or offer would be unlawful under the securities laws of such jurisdiction.